Hi, welcome to the workshop from Trend Signal, where we look at the data and events for this week, the week beginning the 10th of February. Very interesting week last week, a lot of data out, some major announcements and some surprising data from the US as well, and some surprising moves to boot. Let's have a quick review of just what actually happened. The FTSE ended up 61 on the week. That certainly has started to turn, as indeed the S&P and the Dow has. The S&P that rallied 14 points on the week, of which most of that was done on Friday. In fact, more than that was done on Friday. So a very sharp reversal there on Friday following the non-farm payroll, which was particularly weak. But there are always excuses for that. Euro, that rallied quite sharply against the dollar. That was up 144 points. Cable, that's probably one of the weak ones. The data last week for the sterling markets was mixed to poor. Cable, that ended up 31 down on the week. Dollar yen, that ended up 30 points up on the week. There's mixed fortunes there, but I think the yen is turning up, or I should say it is starting to weaken again. CAD has had a fantastic run, the Canadian dollar. But a little bit of profit taking last week, shedding just under 100 points on the week. But the big move of the week was undoubtedly the Australian dollar against the dollar. That rallied over 200 points as the Reserve Bank of Australia made its thoughts known on any further easing. So that created quite a substantial rally in the Aussie. Gold, considering what's happening in the emerging markets, has not done fantastically well, although it was up $22 on the week. That's just 1.75%. Gold, Brent crude, actually, that was the big move. In fact, the oil markets in general, sharply higher. Brent up over $3. That's just under 3% on the week. Bond markets, well, the Bund unchanged on the week. The gilts slightly weaker. So we can see the sort of trends that are developing here. The data last week was poor in the US. We had the ISM manufacturing last week, which came in at 51.3. We expected at 56.2. The ECB, they did nothing really last Thursday. Markets were expecting possibly a cut from 0.25 to 0.1, even an injection of liquidity via this stopping of the sterilization of their own monetary program. Nothing like that happened, which caused the euro to rally further and a little bit of a pullback in the Bund. And then we had the ADP employment data and the non-farm payroll, particularly poor. The non-farm payroll on Friday adding just 113,000 jobs in January, although the unemployment rate edged down to 6.6%. Bit difficult to explain to a certain extent, but the equity market rallied. But if the economy is apparently slowing up, why did that happen? I suspect, first of all, most economists don't believe the data. It's weather related. I'm not sure about that, but weather tends to be pretty bad in January anyway. Bond yields did fall, and I think there was a feeling perhaps that the new chairperson of the Federal Reserve may actually take a slightly softer line on this tapering and may slow it. Anyway, there's lots of reasons. My suspicions are that the sharp fall that we saw in the equity markets at the beginning of the last week perhaps softened the market up a bit, and I think we ended up just having a little bit of a roller coaster of short covering on Friday that propelled the Dow and S&P sharply higher on the back of what was particularly poor data. So data and events this week, we've already kicked off with a slightly worse than expected French industrial production number. The first sort of key event this week, and it's dominated by central banks really, notably the Federal Reserve and the Bank of England. We've got Janet Yellen testifying at 3 o'clock tomorrow afternoon. That's Tuesday afternoon. And there are expectations that she may comment about the monetary policy and what feelings are about the recent soft patch that we're seeing, and any implications for the quantitative easing tapering, which will affect the market. So 3 o'clock Tuesday afternoon, potential market moving. Then on Wednesday we've got the quarterly report from the Bank of England quarterly inflation report, I should say, combined with a press conference by Mark Carney, and there is a feeling that he will talk about forward guidance, the fact that that was tied to an unemployment rate reaching 7%, which it already has done, and the Bank of England could well lower that to 6.5%, or perhaps use other measures such as wages growth, or or just say what their expectations are in terms of guidance on interest rates. But that will again be market moving at 10:30. So all sterling markets, gilts, and FTSE, etc. That has the ability to move those markets. Mario Draghi also talking on Wednesday afternoon at 3:30. That always has the potential to move the markets, and perhaps there may be some sort of reference to the lack of inaction last Thursday when the ECB took no action, which to a certain extent surprised the markets. And then on Thursday we got the main event of the week in terms of data in the US, which is the retail sales out for January. Bit of a soft bit of data expected, plus 0.2% we're expecting, which is a fall from 0.7% the previous month. And then we've got Janet Yellen testifying for a second time on Thursday at 3 o'clock. Again, potential to move the market, so please have that one in the diary, in the calendar. And then on Friday, we've got the start of the flash estimates of the fourth quarter GDP in the Eurozone, starting with the French one at 6:30, culminating with the overall one for the Eurozone published at 10 o'clock. But expectations are for a slight improvement, holding steady, slight improvement type feel, although nothing too much to write home about. And then in the afternoon in the US, we've got capacity utilization in industrial production. Industrial production in the US expected to be a little bit softer from the previous month. And then finally, we have the University of Michigan consumer sentiment, which is an important leading indicator. It's an indicator that we like to follow. The health and well-being of the consumer is important for the markets. If they're happy about their jobs, housing, etc., then they tend to spend more, which then feeds through to retail sales and profits for companies. That's it for the week. An interesting week. A lot of the dailies are turning up on equities following their pullback over the last 3 weeks. So it could be an interesting change in the trend on those markets this week, and not a lot of data to get hold of apart from, as I say, the central bank pronouncements from the Fed and the BOE. So that's it for now. We reconvene on Thursday at 8 o'clock. Thanks very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.